All right, let's get back to Yu-Dee Chang now, principal, also chief advisor at ACE Investment Strategies. He joins us now, stays with us live out of Washington, D.C. You're just listening into what Sri was talking about. Yu-Dee, what do you make of the situation, especially ahead of midterms? I mean, it sounds to me like it's a potent brew of, you know, the rhetoric could start heating up, anti-China stuff. I mean, we've heard Chuck Schumer making noise again.
Yeah, I think that is a possibility. If you think about it, actually the largest trading partner of China is not even the U.S., it's actually the Eurozone. But of course, like you're saying, that when the trade deficit widens like that, the talk of China comes back into play again. So China has been under constant pressure on a yearly basis to actually so-called raise their currency level, right? So U.S. has always been wanting China to raise so-called appreciate their currencies by about 31% in total, maybe about 11% a year. But China has been saying that, well, we simply cannot do that, and they've been holding somewhere around the 4% or so. I think that story is going to be there, whether the trade deficit widens or not. I think, of course, when the deficit widens, it will come into a little bit more emphasized, that's all.
Yu-Dee, amid all this talk about a slowdown in the US growth cycle, wasn't it encouraging? I mean, it was, in my mind, that imports of goods and services grew 3% in June to just over 200 billion. Doesn't that speak to perhaps the resilience of domestic demand?
Yeah, absolutely so. If you think about it, even today, in the midst of a market drop, Macy's actually came out and said that their sales actually rose. So if you think about it, it's kind of interesting. In the U.S., no doubt, the big problem is with unemployment, and that's a question that nobody can answer. How do you create more jobs? But in addition to it, if you look at the people who does have jobs, if you think about it, they're actually stabilizing. They're working slightly longer hours. They're actually getting paid a little bit more. They have also gotten their finances in order a little bit more, and their confidence, their savings rates are up. So if you look at it, all in all, it's not as bad as people think. And the growth factor, no doubt, you were talking about the fact that many economists is actually so-called downgrading or revising their estimate for Q2 downwards to below 2%. The lowest number I've heard is actually 1.4%. But if you look at last year, they were only expecting the growth of about 2.3% before the upward revision. So if you think about it, it's really a lot of it is in our heads, right? 1 second we think things are well, and then we overthink. We go the other way. Now things are not going well. Now we're going the other way. Basically, the economy is still growing. We're not double dipping. However, it's not going to be very robust. Thus, if you relate to investing, it's basically still not overall market investing, but picking the right sectors, picking the right stocks, buying the dips and selling the rallies.
Yeah, speaking of which, trying to get an entry point on the S&P 500. We might bring a chart back up because this seems to have many ramifications, especially across here in Asia. We saw the number sitting just above that key 1088 level, which seems to be a support level. If we do breach it, does that mean a further trip down potentially to 1057? What are the numbers that you're watching, Yu-Dee?
Yeah, 1080 or 1088 or 1080 is definitely the number that the whole world, everybody's watching. You're absolutely right. Many people feel that that's a strong support that really needs to hold. If it doesn't hold, indeed, a very quick 3% more of it, which will bring it down to about the 1050 level, is very, very possible. So whether it's going to hold or not remains to be seen. But I think overall basis, coming back to the same point that, don't forget, many people are also believer of a 10% pullback needs to be bought. So many people are sitting there waiting with their cash. Don't forget, there's still not many avenues for people to get yield, correct? So right now, during the time of right now during the time of uncertainty, the so-called the risk trade is off. So when we think stabilize a little bit, I truly believe people will jump back into the market and bring it back up again, but not in a very sustainable fashion.
Hey, we must go. Thank you for joining us today. Yu-Dee Chang with us on the show. Coming up, we're going to bring you the full bond market report with CNBC's Rick Santelli.